Well, good afternoon and welcome to this very special webinar where we're talking about differentiating for success in our digital world. I'm Al Dominic, the CEO of Bank Director at Finex Tech. I just want to thank you for joining us today as we continue to explore how technology really continues to impact the business of banking. This is a webinar brought to you by both the Bank Director and Agent IQ teams. And if you're not familiar with the two of us, I'll just let you know Bank Director and Finex Tech really serves as a resource, Bank Director to the financial community since 1991. And what we try to do is really focus on the most strategic issues that are fundamental to the senior most leadership teams at financial service companies across the U.S. Joining us is Agent IQ, a company out of the Bay Area that offers a digital platform supercharged with artificial intelligence that improves communication and engagement between financial institutions and their customers. So, for us, any customer or any company that helps banks create happier, more loyal, more profitable customers, well, they fit into that, quote, friendly fintech description, which is why we built our Finex Tech brand in 2015 and subsequently introduced it in 2016. So with Agent IQ helping to create relationships in the digital world that are just as personal as they are in the physical world, but maybe even a bit more enhanced, I'm just really pleased to host this webinar with them. A few quick housekeeping details before we start. I think this is going to help you maybe more than it'll help me. But really, you've joined this webinar in listen-only mode. So guess what? That means you are automatically muted. I do recommend that you click on the slide bar at the bottom of the screen if you want to see the presenters in full screen mode. Now, obviously, if you don't want to see us, you can just keep it the way it is. We do encourage you to ask questions. I'd simply note them by clicking the Q&A button found on the right side of your screen. That's going to be sent to me, and I'll try to ask our panelists for their thoughts as appropriate. There's no need to take detailed notes. This recording will be shared with all attendees within 24 hours via email and on bankdirector.com's website. If you have technical issues, I'm kind of hoping we don't have any, but we'll do our best to address them if you do. If you could use the moderator chat feature on the right-hand side of your screen, that we've found this year has been the easiest way to take care of any minor glitches that have come up. But, knock on wood, we haven't had anything derail us to this point. So on that note, let me introduce our speakers today. And as I do, I'm going to ask each of them to put their video on so you can put a face with a name. Our first presenter is Slaven Biloch, who's the president and CEO at Agent IQ. So Slaven, as you join, let me share just a little bit of your professional expertise and background, because prior to co-founding Agent IQ, you worked at Google for at least 12 years that I'm aware of, initially focusing on the Google search engine, and I think acting as a search lead in the Google Japan office.
Exactly.
So should I say konnichiwa, since I'm in DC, or gozaimasu, since you're out on the West Coast?
Yep, it's still morning here, but so ohayou gozaimasu is good.
And my 2 words of Japanese have been put to good use. My parents would be so proud of what I studied when I was in elementary school. Anyway, Slaven, good morning. It's great to have you here. One of the cool things about Slaven when he was at Google is he led their cloud machine intelligence group. And he really helped to build several large engineering teams and demonstrated a real passion for making machine learning and native language processing technologies more useful. And I know you've launched several user-facing products. So you bring really great perspective to this conversation, not just with Agent IQ, but what you've done in the past with Google and some of the things that I'm sure most of us would find pretty compelling. Joining Slaven is Sean Epinson, who's the Technology Director of Digital Banking at Arvest. So Sean, if you want to join us, I know Sean supports a talented group of individuals that apply the concept of the lean startup to create an award-winning digital experience for customers. Sean, just so you know, I am a big fan of Eric Ries's work as well, so I brought my copy of the book with me today.
All right, well done.
We've patterned our business off the lean startup. We can talk, Horizon 1, Horizon 2, Horizon 3 concepts, all the cool stuff that Sean has been able to put into practice that, again, this guy, Eric Ries, made famous in this book. So good to see you here. Sean's coming in, I believe, from Arkansas. Am I right?
That's right. Yep,
So it's nice.
Northwest Arkansas.
Northwest Arkansas, balmy day for him there. Unfortunately, our next participant is not holed up in some places warm. This is Mark Miller, the head of corporate services at Park National Bank. Mark, as he clicks on, you're in Ohio, and if you all would take my word for it, I have some ice cream from Jenny's, which is based or headquartered and got its start in the state of Ohio, downstairs in my refrigerator, getting ready for tomorrow's feast. So that's not a bio intro for you. That's more of just like a acknowledgement that I'm getting ready for Thanksgiving. But Mark leads the bank's corporate innovations, HR, data sciences, has done process engineering, program management, digital banking, like runs the gamut. So I think, between the three gents that are with us today, deep technical expertise, real understanding of how, customer behavior can shift the way business operates. And they're all in like some really cool seats right now. So, Slav, Sean, and Mark, it's just nice to be able to spend a little bit of time with you guys.
Thanks for having
me.
Are we ready to jump into this?
Do it.
Okay, because we gotta move quick and use people's time wisely. A lot of the conversations we're gonna have really center around community banks. It's one thing to think about what J.P. Morgan spends or Wells or B of A, but I think when we look at the market today and really the investments that are taking place, the creativity that's being shown, there's a number of community banks that are doing some pretty awesome work. And in my opinion, in my experience, a lot of community banks have prided themselves on providing their customers with, exceptional service. But I'm curious, Slav, let me start with you. Is this a competitive advantage that you prioritize?
We definitely think it's an important part of servicing communities, providing people with high touch, high tech services, and our platform, Agent IQ platform, is really trying to enable community banks to do just that efficiently and aggregatively.
Okay. Mark, what about you? How do you feel about this whole, kind of best service possible dynamic?
Well, in our view, community banks do and will continue to compete on relationships. The key here is enabling our associates to compete with the best possible technology to empower those relationships. And I don't think that's changing anytime soon. In almost every complex financial transaction, at some point, the customer wants to switch from DIY to a person. And there's a reason for that. That's because this is a world that they don't know and they want help. And relationship-based banking, and in our view, is here to stay for a long time.
Yeah. Well, Sean, you've heard Slav and you've heard Mark. Anything you'd like to add and build on?
Yeah. It's hard to disagree with either of them. They're absolutely right. Here at Arvest, we really believe in our mission of being people helping people find financial solutions for life. We've done that in branch settings for decades, face-to-face, physically. What our priority now is figuring out how we can take that same need for that relationship and move it to a digital space. Physical isn't necessarily going away, but how do we extend it into the digital space so that relationship can still be built? Yeah.
Well, I'm glad you brought up branches. I had an interesting conversation maybe 9 months ago with the CEO of WisFis, which is in Delaware, and his name's Roger Levinson. Really interesting guy who runs a good sized business in the Mid-Atlantic. He was telling me that in the depths of COVID, their branches saw a lot more activity because you had people who could drive through a window and still put things into the tubes and have paperwork coming and going. Their commercial clients actually engaged in more old school ways than you would have thought. And he said it was interesting to him because that's a business that's invested in technology for years and really tried to make a very easy customer experience available prior to COVID hitting everyone. So to see certain patterns reemerge where people thought, okay, I need to go to the branch because that's where I can get the type of advice that's going to help me maybe with my PPP application or to understand how I can do certain complex transactions without the help of my team being around me. I thought that was interesting, but I'm also curious, has that created, some adjustments to the way that people engage with their banks, because I think that, as much as WisFIS could use this as an example, short-term impact of COVID is, branches are being closed. And so when we think about how people are engaging with the banks and with the people that they count on, what changes are you all seeing? And, I'd really like Mark and Sean to take a crack at this one, if you don't mind.
Yeah, happy to. I think from a branch interaction and transaction perspective, we're about on the curve we were on pre-COVID. If you look nationally or regionally, we were seeing 4 to 5% declines in branch transactions, branch visits per year for nearly a decade. COVID accelerated that temporarily, but if we look at it today, we're on the same curve we've been on. So I don't know that there's been a ton of change in terms of the trajectory. What we did see is a fairly large adoption of alternative technologies and ways to connect with us during the really early days of COVID. And I think it delivered a fair degree of comfort to folks who might not have adopted those technologies at that time. You think about your mobile application or your online bank or any other electronic means of conducting business with our bank. Different customers engaged early on, but really post-COVID, we're on about the same trajectory we were on beforehand.
Yeah, same for us. Same for us here at Arvest. We've seen just adoption of our digital channels, mobile and web, continue to increase, and that's going to continue. Especially in those early days of COVID, as we started to open up our teller lines a little more, we saw just a ton of traffic through them. We saw call times that were longer than they normally had been. When we talked to customers about why they called in today when they could do it themselves, they said they wanted to talk to a real person. When we asked them why they came to a drive-through for something they could have done from their living room, they told us this was the only human being I was going to see this week. And so, if anything, it really showed us that this problem of remotely or digitally building a relationship is one worth figuring it out.
Well, and Slavin, so this is a great segue into the business that you're building, and helping customers to better engage with potential bankers. Can you talk a little bit about, what you're sensing and seeing in the team as a whole, why it's excited to be doing what you are?
So,
go ahead, Slavin. Sorry.
Sorry. So I was going to say, we definitely have heard from our partners, kind of what Mark and Sean have highlighted here, that there is more people adopting digital, they're becoming more comfortable. The age boundaries, which were kind of considered problematic before, have gone away, and people have learned to use digital. Nonetheless, they've not forgotten to be human, and they still like that ability to have a connection, a peace of mind, knowing who they're working with, who they're dealing with, and knowing that somebody, can get back to them and they can back to them. And that's really what our technology is, again, trying to enable. And, it's great to hear from our partners that it is resonating very well in the wild.
Well, so I want to take this back then to Sean for a second, because if you have a personal relationship, I'd love to kind of unpack the idea that that personal relationship can become a great digital engagement and the interaction that you have, because there are certain cost efficiencies that you want to find, and you don't want to lose the business, you don't want to lose the trust, but certainly there's things that you can do more efficiently and effectively. How do you think about that personal dynamic shifting into the digital world that we all occupy?
Yeah, I don't want to pretend that we have it all figured out yet. We're still trying to figure out the balance between automation and bots and what a real person needs. We're simply right now giving the customers an option to reach out to us, to engage in this. We do believe it matters. We look at the feedback that we get through our digital engagement channels, and it's positive. People are surprised that we offer a service that will give them a direct connection to a banker that can help them. And so all things have been positive from our standpoint. We're happy to be playing in this space that nobody really has figured out yet.
Yeah. Mark, how about you?
Yeah, so our digital chat app, which we built with Agent IQ, right, with their technologies called Park Direct. So if I refer to Park Direct, that's what I'm talking about. What we see there is that it's a digital interaction, but the human mediation is very important. Um, these things take a long time to measure value on, right? Because the value comes from things like duration of relationship and depth of relationship, and that's going to take time. But what we have seen is deeper loyalty to an individual banker, and almost certainly that's going to lead to more loyalty to the institution over time because it's the way we serve. And it's quite frankly, it's great for our associates who are doing the serving because that's what they love to do, right? We exist to serve our customers and we want to serve them more. Our associates can handle a larger portfolio of customers almost across the board um, by using a digitally intermediate um, chat application like Agent IQ provides. So we've really found it to be the best of both worlds, right? You find this digital intermediation, but there's a human to human connection, and it really works well.
Have you, let me see if I can say this right. Do you distinguish between a branch customer and someone who is a digital customer, or are they customers?
Yeah, we don't, and I don't know that we ever will. So far, what we found is the customers that engage with us, whether it's via the mobile app or via Park Direct or both, almost certainly also engage with us at a branch at some point. So the strategic question you have to ask is, how do you want to make those associates that the customers have a relationship with available to them? Do you have one associate play all those roles, or do you have several associates play those roles? And those are things we're wrestling with.
Yeah.
There's a degree to which it would be more efficient to centralize a team that is doing digital connection and have your branch folks stay in the branch and facilitate the branch connection, but maybe the customer would rather have the same person across all mediums. So we're working on that part of it.
Yeah. Sean, what about you?
Yeah, we certainly pay attention to how many people use our branches, how many people use our digital solutions. But we're really trying to take it a step further than that. We don't simply look at it as you're a branch customer or you're a digital customer. We're trying to get down to preference. And the best way to explain it is if somebody comes to a branch to deposit a check because their mobile app wouldn't allow them to because of certain limits that we have on the amount you can deposit, they'll show up in all of our reports as somebody using a branch, even though that is not their preference. And so we're trying to get a little deeper into what customers are doing and so that we can figure out their preference. And then we're going to work to accommodate that. Another preference that we're trying to understand is something we've called transactional versus relational. Some people want to get in, get out, and get on their way. Other people like to know who they're doing business with. They like to have a face or a name that they can refer to. So these are both important. We're trying to figure out how we can satisfy the needs of whatever the customer has. We're really trying to get down to their preference, not just offering them something that we can offer. We want to meet them where they're at.
Yeah. And I think, at the risk of sounding cliche, you can't manage what you can't measure. And what you're both talking about is so, I think, valuable in terms of setting your own expectations for how you want to treat people and the experience that you're looking to develop and really provide over an extended period of time. Slavin, you and I have had a chance in the past to talk about synchronous versus asynchronous engagement. And that's kind of a mouthful, but I think you've got an interesting perspective on this concept. Could you maybe talk a little bit about, A, what this means, and B, why I say you have a perspective on this?
Sure. So banking traditionally, you had to go in line if you want service. You have to go in a branch, line up if there is line until you can talk to a representative that can help you, right? And both the resources of the bank and yourself had to be aligned. And some of the frustration we hear from the end customers when dealing with banks is really having to wait for the service, and which is not part of solving the problem, but it's still the time that they need to invest. And with a synchronous service model, we actually allow them to not having to wait actively for this to play out. So customers can either send a message to the bank, or they can request a callback, or maybe schedule an appointment. There's lots of different ways that this can be rolled out. But because customers are not having to wait for the service, they actually get the benefit of feeling that they're receiving service with much less effort and much easier. And we see technology as an enabler of providing these synchronous service models, which are much easier on the customer, but also more efficient for the bank. Because when you look at the bank's perspective, they don't need to staff for peak load whenever the customers are coming into a branch or calling the call center, but they can staff for average load, basically just make sure that they have enough people to get to the request in a reasonable amount of time. So it's a win-win situation for both.
Gotcha. So Sean, do you see a difference in these types of services?
Yeah, absolutely. We are really trying to support that asynchronous type of communications, and that's one of the things that's been nice about the Agent IQ platform. Take, for example, a mother or father who's dealing with an infant. They have something they need from their bank. They've waited on hold. They finally have a real person, and then they got to deal with the baby's spitting up or doing whatever babies do. And that can be a very stressful situation. They've waited on hold. They have a real person finally, and then they get pulled away. Well, that doesn't need to be that stressful. We can deal with life. We can deal with banking. They shouldn't have to worry about losing their context, their place in line, the person they're talking to, the story they just told. We're here to serve our customers, not the other way around. Asynchronous communication is just one of the ways that we're reducing that stressful situation and providing a better experience for the customer.
And I hope somebody in your marketing department is eavesdropping on this webinar, because you just gave like the best advertisement. I mean, that would resonate with every parent that would say, wait, that's exactly what I need. I've been in that line and I need some help.
Yeah, we've all been there in one way or another, for sure.
Yes, indeed. Now, Mark, I'm curious to get your take. Are you supporting one or both of these models that Slaven just described?
Well, I would say we certainly support both today. We have an eye towards the future in terms of what's the branch of the future really look like, and what purpose does it serve. We believe that branches will become less and less transactional over time, and they will be more and more advice-giving centers, very likely. And I think as that change takes place, the transaction-based environment will become more and more asynchronous, and we want to be there to support it in that way, and we are. But we would also want our branch environment to likely move more towards, you schedule it in the most convenient way for you, and we'll be available on your time to meet you, and we'll have an expert on location to talk about your thing. To me, that's the branch is going to change in the coming years. We're still able to serve in that way, just in a way that is most convenient and best for the customer.
Yeah, and what's interesting as you guys are talking, it strikes me that this is not contained to the financial sector. If you look in the health space, which is so similar in some ways to the way the financial sector is. I mean, you're talking about two hugely important industries for the U.S. economy who really touch consumers' lives on a daily basis. And you look at a company like CVS, who did a significantly large merger with Aetna. They made some news earlier this week about closing 900 of their facilities, but they're also upping their on-site medical game. And it's all around what I think you just said, which is advice giving, and then being able to provide the support that's not that simple transaction, but it's something that creates a stickier, more, I'd say, healthy relationship. Because if you start to create that trust where when times are tough, you've got a place to go, that's, I think, what businesses in multiple industries are aspiring to figure out right now. So I'm kind of curious, as we're talking about this, the advice giving, the move to digital, supporting people as they want, are there tools that you get excited about? I know the Agent IQ is doing some really great stuff, but to engage with your customers digitally, I have to imagine that there's more than just like one kind of hammer in the toolbox right now. Mark, you had some ideas, I think.
Well, so certainly what we're doing through Park Direct is a part of the answer to that, right? Where you have a banker that's available to you, and that banker can touch other experts and bring them into the conversation. That's part of the solution. But there's also, things like customer context at the point of engagement, right? As we build out a data infrastructure, the data infrastructure should tell us everything we need to know to best serve that customer. I mean, those kind of tools where you really get context about the depth and breadth of a relationship with a customer at the point of engagement, wherever we're engaging them, they will be very, very well, they're going to be ubiquitous in our industry, but they're important for community banks and regional banks to build today. The reality is we spend in a year what JP Morgan spends in 15 minutes on R&D. And that's not made up. That's a real number. That is, we have to pick very carefully where we choose to invest so that we can best enhance the relationship with data, context, and service.
Yeah, I think it's really well said. And that stat, not necessarily specific to your bank, but it is staggering when you think about the amount of money that some of the large money centers are having to put out, just on cybersecurity, let alone, all the different applications that they're trying to develop and the fintechs they're trying to fund. I mean, it's an interesting time we are a part of. And Sean, I want to bring the question back to you because, again, I think there's different ways that people approach this. Are there tools or things that you get excited about that you're using right now that are creating that, relationship and experience that you covet?
Yeah, we are certainly doing what we're doing with Arvest Banker Connect using the Agent IQ platform from an asynchronous perspective. We've also recently started using the Agent IQ platform in more of a live chat setting. I think what Mark said about just being having context is so important. So we've put live chat in our digital account opening flow. And yes, some of those questions are not about digital account opening, but they start there and they grow. That's how you build a relationship. But knowing from a banker perspective, knowing where that customer is at when they're asking this question just helps you all the more to be able to service them. We're trying to decide what to do about video. Does video have a place in here or not? We're trying to decide about that. Co-browsing is something that is a pretty cool piece of technology. Just don't know how comfortable customers will be with it, but I'm sure we'll start to test and learn about that a little more. So there's, as COVID is I don't know if it's over, if it's still going on, but man, is there a lot of innovation in the collaboration space. We certainly want to have our hand up and be a part of it. We don't know where it's going to go, but we want to be a part of it.
Well, so as you were talking, I just got pinged with a question from one of the attendees who's curious about kiosk-oriented branches for transactions. And their question is, will these become more common and have a smaller footprint as we move forward? Anyone want to take that one?
I'll take a swing at it and say yes.
You think I got a crystal ball? Nobody's going to hold you to the crystal ball being right, but I think you all have opinions that are based in experience.
Well, we're not treading new ground here with kiosks, right? There are other industries that are doing that. I do think banks will adopt some kiosk-based ordering. I think it'll be utilized to attempt to take things like human error out of the equation and simplify the experience for the customer. But for banks that are competing on a service orientation and believe that's where their real strategic advantage is, you would have to deploy that kind of technology very carefully. I think it's a long way for most community banks.
John, you agree?
Yeah, I don't know if this entirely checks the box on this question, but we have been doing something that many other banks have been doing. We've been doing it for about 3 years, called ATM with Live Teller. And it is, in my mind, what a kiosk-based branch might be. Of course, they're sitting outside of fully staffed branches, but we have support for them for hours above and beyond what the branch is open. So somebody can pull up to one of our ATMs with live teller. They can talk and see a real person, a real Arvest associate, get what they need, and get on with their life. So we've certainly been playing in that space for a few years now.
So as we're talking, I'm thinking about how you get started with some of the concepts that we've discussed. So I feel like we almost started in the middle of the book. So again, I've got my book started right next to me, and I know that some of these are great ideas that are born from internal discussions. Others are because somebody brought an idea that a team would say, "Hey, that's really compelling." When I think about the state of the financial space at the moment, broadly speaking, banks seem to be wrestling with the move to the cloud, their payment strategy, and what they're going to do with Salesforce or some other third party that might own their data. If you put your data on another company's platform, so those are like broad things. And if you go into some bank boards, they're trying to get their arms around that. But if we bring it back to what we're talking about, which is this digital engagement and creating the experience that is the wave of the future, there's a strategic decision that has to be made. And I'm curious how that strategy gets first developed and then executed and measured against. And Slaven, because you working with different companies, maybe you could anonymize some of your experience as to when you were brought in and how it was explained to you that this became a priority for a financial institution.
Okay, so one thing that's kind of important to remember, technology keeps moving faster, so the change is just accelerating. So, for everybody who is having trouble keeping up now, it is going to get worse. And that leads to natural conclusion. You really cannot do everything, right? And the question that we have been asking, and we've been talking with our partners about, is what are the most important things that we should be doing to differentiate ourselves, to position ourselves better in the future, and that does come down often to differentiating on service, having relationships, having ability to help your customers where they are, and making it seamless for them. So that is the aspect that's not going to go away. A lot of other technology is really working to make that easier and simpler to deploy.
So, but as you say that, that's kind of the old Moore's law, which we've now passed, where the speed and pace of change is just so significant. But you still, from a business standpoint, have to say, we're going to put our flag in the ground right here. And what Mark said earlier about, how do you compete? We're in a world where JP Morgan can spend a whole lot more than a community bank. But that doesn't mean a community bank doesn't have relevance and opportunity to create something memorable. So when it comes to the strategy being developed, how can somebody who's watching this who says, I'm interested in doing what John's done, what Mark's done, I'm interested in how Agent IQ is accelerating some of these, relationship builds, there's got to be a business case made, and there has to be a strategy that you can actually grab onto and say, this is why we're doing this. Not because it's the bell or whistle that's loudest at the moment, but because you're going to be able to sustain it and build off of it. How do you start that type of conversation, or how do you create that strategic plan so that others around you get as excited as the person who's leading the project? Again, Slaven, I'm going to stick with you because working at Google, you had to run all these different teams, and you took different products to market. That's not a one-person job.
It's not. So I think it's important to start small, right? And I think John and Arvest especially is doing a very good job of experimenting and testing quickly hypotheses and taking on the ones that prove out to be right and grow from there. And I think establishing that mindset is very important, because it is important to not just deploy the technology, but also develop the culture that allows for changes to be made and propagated through the whole organization.
So would this be like a sprint to say, okay, if you're starting small, you want to move fast, so you can figure out if you're doing the right thing, and then you just pivot accordingly?
So sprint is typically even shorter, but it is about thinking in an agile mindset, and having a finite set of time to test something and make a decision on it. So it is about shortening that cycle as much as possible. 2 weeks is probably too short, but 2 quarters or so might be a much more reasonable time frame for a bank. And luckily, there's not so many things, hypotheses to try that you cannot do it with. If you do it with the smaller teams, you can do several of them in parallel, and then luckily the good ones kind of come to the top.
Yeah,
at least that's what we feel. So
that makes a lot of sense. So now I'm like really interested to hear like from Sean and Mark, your experience of, okay, you started off on this and you're trying to move quick. You're trying to figure out, is this strategy viable? Were there issues that you had to resolve that you're comfortable sharing or talking about? I mean, I know there's probably some that you don't want to talk about, but we all learn from each other. And if like in technology, you're building on the shoulders of those who came before us, maybe you could help us understand some of the issues you had to resolve as you were starting off on this process. Sean, you're nodding your head, so I'm going to call on you.
Yes. Yeah, we definitely had some things that we learned that didn't pan out the way that we thought they would. One of the things that comes top of mind is just the availability of our associates. When we started our testing with the Agent IQ product, we started using associates that are in the branch as our bankers that people could reach out to. Well, procedures for our branch people were changing like every week because of different COVID restrictions and things like that. And so it was a very difficult time for them. Additionally, when we looked at when customers were trying to engage with us, with those bankers, a lot of times it was after branch hours. And so we weren't there for them when they needed us to be. And yet here we were, this digital product that, people think digital, they think always on. Well, we weren't. And so we had a difficult time in the beginning being there when our customers needed us to, especially on the weekends, people that work overnight. That was difficult. We had to pivot, but we had the data to show people need us here and people need us there. It wasn't so much just a hunch or something we wanted to do. We had data to inform our decisions.
Thank you for sharing that. Mark, how about you? Would you mind being transparent and honest with us about some of the challenges early on?
Yeah, we have, Sean faced all the same things we faced. This is a platform where the customer, because of what it is, right, and it's mostly mobile and it feels like a text, they expect a quick response. What we found, and we've solved that, right? We've solved the 24/7 availability and those kind of things. But what we found is by the second or third time a customer had interacted with their personal banker, they would almost always choose to wait until their personal banker came back into the next day, which speaks to the relationship that they're building with that person. We give them an option to connect for immediate help. And sometimes they will choose that because they have an immediate need that needs to be resolved. But nearly every time, once the relationship has begun to be formed, the customers will choose to wait. And that's critically important for us. We need to be there on 24/7 service, but almost always they'd rather deal with the person that they have already got a relationship.
Yeah. So Slaven, let me turn to you for a moment and just, ask your opinion, because both Mark and Sean have been able to, take this concept and start to, move it into something where they've got data and they can look at customers and they've been able to say, what, we have to address this. How would you suggest measuring the success of a digital engagement strategy? Because what you said earlier, I think, leads me to assume your success is going to be agile just like everything else. So you might have some short-term goals, some medium ones, and then like the long-term, wouldn't this be like ideal if we could get there? But how do you think businesses and banks in particular should be measuring their success when it comes to this?
So it is important to start collecting the data that you have and not try to get the data that you cannot get. And, often we have heard of banks really trying to connect it to the end line, kind of end goal, which is probably about having established measure of loyalty, having increase in wallet share, or something like that. But in reality, those are very hard to get, and they take a lot of time to obtain. So here also it is important to start smaller, and easy data to get is customer feedback in the platform. And we do have lots of examples of customers being very happy and providing comments on how much they like the ability to be able to talk to the same person over a long period of time, not having to repeat themselves, and all the benefits that we kind of expected the service will bring. There's also intermediate measures like customer satisfaction or NPS or whatever measure of customer service that is. And then the metric that Mark has mentioned, the desire for customers to wait for their banker when other bankers are available on the platform and they could help them. And that really shows, again, that they are valuing this type of service. So there is a lot of signals there. There's a lot of data that can be collected and can gradually lead you from having some hypotheses, kind of proving them out, and then adjusting the course. And It is important to keep in mind that although in general the concept makes sense and it seems kind of straightforward, there's always a lot of learning to be done with real interactions. Customers are not unified mass of people, but they actually do have preferences that vary from individuals and groups, and different behaviors, different desires will become apparent when you start looking into the data. So it is a process that is gradual, but ultimately should lead to a better customer service, happier customers, more loyal customers.
Yeah, I think that pattern recognition that we've talked about, recognizing and appreciating that somebody wants to have, a relationship with a banker, and it takes a few cycles to pinpoint that. I think that's important. So then, Sean, how do you think about, just the time component, and how do you say, as ambitious as I am, as much as I want to see this succeed, like I have to pull back a little bit because I have to let it ride. Do you have some type of, kind of internal time frame in mind when it comes to seeing results?
Yeah, if you ask my boss, you might get a different answer. We'll see. But I'll tell you, we started experimenting in this space in late 2019, and we are more committed to getting it right than being right with any one set of applications or solutions that we put out there. So we fully expect to continue to test and learn in this space. We don't know where it's going to go. We don't know how long it's going to take us to get there, but we do recognize that we can't expect people that want a relationship with us to come to the branch every time. So our leadership has recognized that this is an imperative thing for us to do as a bank with our mission of being people helping people. And so the short answer is no, we don't have a time frame on it. We are committed to learning, exploring, and figuring out just what is needed for our customers in this digital relationship building space.
Okay. So I shouldn't call and find out if there an actual, like I shouldn't say I need an answer. Mark,
yeah, please don't.
I would imagine that what Sean's going through is probably similar to how things run at your shop.
It is. We are committed to continue to innovate in support of the business strategy, right? And our business strategy really does start with relationships. And so, we think about, it's not just the Agent IQ platform. There are many other things we're working on from an innovation perspective, and we think about getting things to something like a minimum viable product that could be tested. Go test it, learn from it, retest it, learn from it, and then expand. Agent IQ is a product we've expanded with. We went through several iterations of minimum viability, and we like where we're at with it, and we like that it's growing. But yeah, I would say there isn't a finish line beyond. We want to continue to invest wisely because there's obviously a limitation on how much we can do, but we are pushing the limits on how do we get digital right with a relationship in the middle of it, and we're going to continue to do that.
Yeah. So, we've only got a few minutes left, and I don't want to miss the chance to talk about the development or creation, if you will, of a virtual branch. And I almost want to pit the two of you against each other because I'd like to get your take on it. But more important than how do you feel, it's how would you try to differentiate and distinguish between what you're doing, Sean, at Arvest and what Mark would be doing? Because again, if you're creating a virtual branch, that's not tied to anything local or physical. You're not going to drive past it in your car and think, oh, I'm so happy to see that big billboard out on the side of the road. John, have you been exploring the strategy of a virtual branch? And if you have, could you tell us a little bit more about it?
Yeah, we have. It's tough to balance because you mentioned driving past a virtual branch and saying, oh, there's the virtual branch, but there are many other avenues to make customers aware that you have the service out there. The trick is to not have it be, a bunch of banner ads that are annoying to people and that they just kind of tune out. What you want to do is be in the place where your customer is when they need help. And we're trying to figure out what the right balance of that is. We've just started marketing this. We've been learning with this product for a while, and we've had good results, and we've done very limited marketing. It's been word of mouth. It's been some of our branch associates telling people about it. We're excited now that we know we have a product that we can help people with to figure out how we can best tell people about it.
Mark, how about you?
Yeah, well, so I'll have two different answers to this. One, I think Sean and I are there's enough space for several good banks to be exploring this. But marketing a product like a virtual branch almost certainly starts with tangential markets where we would have some brand awareness. Otherwise, I don't think it would make a lot of sense for us to try to explore, an Ohio-based bank doing virtual branches in Arizona. We might eventually get there, but probably tangential markets where we've got some recognition is where we would start. The other thing is having a truly minimum viable product for a virtual branch goes beyond, a chat app that's digitally intermediated, even document signing on it. You've really got to be able to replace almost the entirety of a branch, electronic signatures. I mean, one end to the other within that branch, and that requires a tech stack that, when combined, is minimally viable, and that's the journey we're on, and we're not to it yet.
Well, don't worry. I don't think you're alone in having that realization. I think this is like one of the most interesting times to be in the financial sector. When you think about really the last 10 years, you can think about, the Occupy Wall Street stuff, the financial crisis of 08, 09, 2010, and what that spurred. That was, like you saw Kabbage and Lending Club and OnDeck and like the fintechs 1.0, if you will. We keep moving down this, cycle, with COVID. I don't know that the next chapter has been fully finished, but, certainly there's a lot going on, open banking, embedded fintech, embedded finance, companies that are exploring banking as a service. The whole dynamic of banking has really, I think, shifted much faster than people had even been predicting it would. And so, kind of to take us all the way back to the beginning of our conversation, I just like to end by talking a little bit about the difference between customer service as we think about it and banking service as we need to provide it. Because we all have that customer service, kind of mindset in our head of, oh, I'm going to go to the Four Seasons and I'm going to have a great experience, or, I'm a frequent flyer, so I can pick up the phone and get, somebody on as a ticket rep and change my flight. I mean, I know personally I've been flying American for a long time, and I get put on hold for anywhere from an hour to an hour and a half. If I'm lucky, they'll, when they call me back, I recognize the number. Otherwise, I miss the whole thing. And customer service has changed, but banking service has changed. So, for each of you, I'd like you to maybe take a minute and just share your perspectives on what this means. And, Slavin, you've been patiently sitting. I'm going to start with you. We'll go to Sean next, and Mark, you'll be batting third?
Yeah, I think it's important to realize that customers are not comparing banks to other banks or their experience with dealing with banks with other banks, but they are comparing with their experience with other digital and physical service they're receiving. So the innovation that Amazon and Google and whoever is driving is really raising the customer expectations, right? And the banks, to some extent, need to look to those areas to see where the ball is going, and then adapt their business model, their approach to servicing customers to better match that. I think again, it is obvious that customers will be moving more digital and in their interactions and in their expectations. And then really his question that remains to be answered is how to provide something that differentiates the banks, how to appeal to the customers so that they continue doing business with those banks instead of looking otherwise.
Thank you, Slaven. Sean?
Yeah, really, we're just recognizing that behind each and every one of those servicing transactions is a real person who is trying to get something done, and most likely didn't wake up that morning saying, I can't wait to do this banking transaction. We're trying to see them as a whole person, treat them as a whole person. And I do want to relate, we started with associates in our branch. We now have a focus group in our contact center that is providing the most availability in terms of hours as any group in our bank. Taryn Pittman, our director of our contact center, has really used this virtual branch as an opportunity to level up all of our different servicing channels, because we're far more focused on, yes, we want to do great customer experience or customer service, but we want it to be a part of a greater customer experience. And so recognizing that there's a person behind each and every transaction, whether it's through virtual branch, through phone, through email, whatever it is, that is something that just is kind of our North Star. We're real people helping other people.
Awesome. So Mark, last one, banking service, customer service, and that dynamic.
Yeah, so like Arvis, we want to see people as people in every transaction. If I were to put it as concisely as I could, I think it's we want to the relationship and customer service and how we provide it is the core of our strategy. We happen to provide fantastic banking services as a part of that strategy, but it's closer to that than the other way around. Not we're a bank providing customer service. It's closer to we're a customer service entity that provides banking products. I think that's the way we think about our strategy. We think that's the niche that we play over the very long term, and we quite frankly think there's room for many banks like us to play that same niche.
Yeah, and I think that as delivery models change and people realize there's no one way to actually do this right, we're just going to find more and more examples of how people work and what gets them excited. So Slaven, Sean, Mark, I just want to say thanks. I know that we're coming up on the holiday weekend. Hope you guys have a great one. I certainly appreciate being able to be a part of this conversation. As a reminder, this is a recorded version and it will go out in about 24 hours. So maybe you're watching this after the fact. I hope you are. We're going to post this on the bankdirector.com website. We'll make sure that's easily found by everyone who's participated today. Again, I'm Al Dominic. Thanks for spending a little of your time with us this afternoon.
Thank you.